Welcome back. As promised, let's get in Dharmesh Kant, Head of Research at Chola Securities, who joins in on the show. Hi, Dharmesh. Good morning. Good to see you in. IDFC First Bank, that's going to be top of mind, right? That fraud has been detected at one of their branches. 580 crores, 590 crores, approximately small percentage of their deposits, small percentage of their net worth as well. But the problem is this sort of incident obviously creates a very, very negative sentiment for the stock. Management is trying to clarify on a call that's ongoing. But what's your view?
Yeah, good morning, Nigel. Thanks for having me for the show. Definitely not good news, and one more private sector bank falling to some sort of fraud by employees. So internal systems and controls have to be looked into more deeply. And the maker and checker kind of a thing, which I think management is, highlighting to that. But there was definitely some gap out there, and that's the reason why collusion by colluding employees, such kind of activities happened. It's a dent, a notable dent on the net worth and the deposit kind of a thing. I think 10-15% kind of a stock price correction will immediately happen on the opening itself. And thereafter, since given the history of IDFC Bank, because it was trying to recover, it was trying to improve its return on assets and trying to improve their deposit base. So this all will come into questions. And small banks, when you are coming up and you faced with such kind of a problem, so depositors, faith into the system itself comes under a scanner. So all the more uphill task for IDFC Bank. The only advice would be don't buy the fall, wait for things to stabilize, and maybe later on one can look at it. Not now.
AU Small Finance Bank, if it falls in sympathy, though there are no allegations of fraud, but it has been, it's been removed from the panel from Haryana government. So if there is some collateral damage today, would you look to buy it?
Yeah, definitely. Yes, good morning, Diba. I mean, AU Small Finance Bank stands on a different set of fundamentals. The bank has been coming up quite nicely, and the run rate has been quite good on the growth front. That kind of a super number growth now, since it's become a bank, it's not feasible. It will definitely taper down quite a bit, around 20-22% is the likely run rate going forward for next 2 years. But having said that, optimization of cost to income ratio to maybe 45% or 43% from the current 57% level will take care of the depleting growth. So our advice here is the one leg of the entire run-up has happened from this becoming a universal bank. And now one has to wait. It's a time call. 2-3 years it will take for a next leg of a meaningful run to happen. So any 10% kind of a decline, whether it is because of this news fall or because of any other market correction, if there is a correction, then it's a buy on decline kind of a bank. Definitely nice if you are maintaining a mid and small cap portfolio. It merits a buy there, but horizon should be at least 3 years from now.
Okay. All right. Got that. Dharmesh, what about UPL? The stock from the recent close has seen a decent rally. Now they've announced this scheme. Management believes that it's going to unlock value. A lot of brokerages are questioning, but what's the, for the PE it gives liquidity. But for a minority shareholder, what kind of value unlocking is there? They're still a little bit unclear about that. And it's not resolved the leverage question, which is on their books. So the deleveraging hasn't really taken place. Your view on the stock after the recent run that we've seen from the lows?
Yeah, I mean, last quarter things have shaped up well for UPL in the last 2 quarters. Otherwise, it was a very volatile kind of earnings trajectory which UPL was giving post the merger. Initially, post the acquisition of Adventa. But I think the seed business was the one which was the cash cow for UPL. It was having a consistent margin of 17-18%. And it was delivering the numbers on the console basis. Now, since that's out of the business, so the two, it will be two different set of business and the numbers will be very clearly visible. So the agrochemical part of UPL business will be a challenge going forward, though things are, improving on the global scenario. Be it Europe or US and the input supplies from the Russia and the China region. But it will be a challenge for UPL to carry out there. And they have, several cross-currency kind of exposure, both on the debt side and on the business side. So in past, they have struggled to manage that very, effectively. And you rightly said, with this kind of a demerger, nothing, comes into the balance. So some equity bumping would be needed in the demerged business, which is non-seed business, the chemical part of the business to bring down the debt. So Let's see how it shapes out. But to my mind, shareholder would be better off having the seed business in place.
Yeah, no, absolutely. That's Dharmesh. Hi, good morning. 12 minutes to go for the pre-open session to kick off. Have you spent any time looking at these exporting companies, especially on the textile side, etc.? There are kind of slightly differing opinions coming through. But what's your sense?
Yeah, good morning, Prasad. I mean, a lot of volatility out there, and every third day, fourth day, something new is coming up on the entire tariff front. So very hard to take a call. I mean, you can take a couple of days kind of a call. If today, definitely all these companies will open up nicely and will give you a trading bump. If you're lucky enough to get it early and enjoy 2-3% kind of upside from there, good for that. But to my mind, I think this 15% kind of a tariff gets settled for some time. And this will be the ballpark number around which the balance of, future 1 year, 2 year kind of projections can be taken. But again, it's a 15% additional tariff, which was not there earlier when these companies were exporting to that. So more or less, the nice rally has already happened in most of the export things, be it textile, gems and jewelry, and the other in the same market, even the feedstock, shrimps and all. So maybe 4-5% more from here, and that should be the end of it. So stay away is the only call from such sectors. Look into domestic facing economy. I think there the real juice lies going forward for next 6 months.
Thank you, Dharmesh. Great chatting with you this Monday morning.